Hello traders, and welcome back to another video. In this video, we're going to be discussing how you can utilize balanced price ranges for high probability trade entries. So getting right into it, some of the things that we discussed in recent lessons here on the YouTube channel, we were talking about entry criteria, entry checklists that need to be met, and high probability signatures for a trade entry. So first and foremost, before utilizing a high probability PD array, whether it's a balanced price range, a high probability inversion, a high probability order block, we need to understand that draw on liquidity is the number one priority. We need to have a clear draw on liquidity, and if we do not, we do nothing until we have a better idea of where price is likely to go. After we've identified a clear draw on liquidity, step 2 is to wait for manipulation. So with macro power of 3, we know that manipulation occurs where? For a short setup. Above macro's opening price. MO, if you're new to the channel, just stands for macro open. If you ever see that on my charts in this checklist, or you'll often see it on my charts down here, anchored to actually that macro opening price. So as you see here, that gray line is anchored to this first up close candle. That is the 3:50 a.m. 1 minute candle, which is your macro opening price. So for this particular setup, we see that we're operating during 3:50 to 4:10 a.m. Eastern time macro. So we see clear as day, they have engineered sell side liquidity. There is relative equal lows right here below macro opening price. And during the macro, we spool above macro opening price and importantly, leaving behind the engineered sell side liquidity pool. Now let's go back to the checklist. Step 3 is we require buy side to be swept. There's a clear buy side liquidity pool that is being swept above macro's opening price. Now, all we're waiting for after these few things have occurred are signatures in price that would suggest a turning point. So an SMT is an extremely strong signature when looking to identify reversals, and we see that here. NASDAQ is making a higher high relative to this high, while the S&P was failing to. So that's your Kraken correlation that bullish order flow is potentially starting to break down. After this SMT, after the manipulation has occurred, after understanding that we still have a clear draw on the engineered sell side liquidity pool, we're waiting for a high probability entry method. And in this case, it is a BPR or a balanced price range. So how can I classify this gray area as a BPR? Well, if you look here, we have a BISI here and a BISI here. So 2 consecutive BISIs where buy side delivery has been offered. After the SMT and we see this turning point potentially taking place, price delivers back below those BISIs and closes below those BISIs. But what do we leave behind? We have this SIBI passing through these 2 BISIs here. So it's had buy side delivery and sell side delivery, and especially after an SMT, we want to see this push price lower. So the return into this BPR can be our entry. Our stop loss can go above the swing high, above the BPR. And as you see here, I have this labeled as a breakaway gap. So if this BPR has already had buy side delivery and sell side delivery, if we have any inefficiency above that balanced price range, I want to see that remain open as a breakaway gap, or in other words, I don't want to see price get up there. Now, my stop loss will allow for price to wick up there if it wants to, but best case, it does not even deliver to it. Okay, it can still deliver to it and then continue lower. So I'm allowing my stop loss room to breathe in case price wants to do that. But again, best case, I do not want to see it get up there. I'd rather just see us come into the BPR and start to expand lower towards our target. So the balanced price range can be an extremely high probability trading entry method, but we need to still have the entry criteria met for a trade setup. Clear draw on liquidity, clear manipulation, time and price meeting. In other words, we want to see that manipulation occurring during the macro. Now, will the BPR be presented every macro? No. Will there be a trade setup in and of itself presented every single macro? No. But your understanding and your ability to identify these high probability trade setups and eventually a BPR as a high probability trade entry method will allow you to be flexible for when the market presents to you a balanced price range setup, right? Sometimes it will give you the clear draw on liquidity, macro manipulation, and then a high probability order block, as we've discussed before and within the Discord, or a high probability bearish inversion, right? And your understanding of these various high probability entry methods allows you to be flexible and just stay fluid with price and take what the market is giving you. So I hope you guys enjoyed this video. As always, let me know if you have any questions in the comments, and I will talk with everybody soon.